assuming that 2.5% on this $40 trillion platform, that's $1 trillion of demand. Now, it's not that, and that would more than double the Bitcoin price right there if we just assumed it was all done in Bitcoin.
In the No Monthly Update, CEO and CIO of ARK Invest Cathie Wood gave her prediction of what she sees coming with cryptocurrency, specifically Bitcoin. Big news occurred this past week when juggernaut investment firm BlackRock partnered with Coinbase to make it easier for institutional investors to manage and trade Bitcoin, taking the world's largest asset manager into a cryptocurrency market. Cathie believes that once the onboarding process gets underway for institutions, this will at least double the price of Bitcoin, but the price can run up much, much further. Cathie suggests that a lot of Bitcoin is out of circulation because of the hodlers, and once the institutions get involved, the scarcity factor will create a huge run-up in price. Bitcoin currently is trading for $22,938, which is down 1.2% in the past 24 hours. Clearly, the impact of BlackRock on Bitcoin's price is not immediate. But if there is any foreshadowing as to what's to come from BlackRock's immense power over markets, we can look at Coinbase's stock. For the better part of 2022, it seemed like Coinbase was falling under Murphy's Law, which states if anything can go wrong, it will. Add on a pending SEC case, and Coinbase stock plummeted, falling 80% from its all-time high, reaching a low of 49 just a month ago. But since announcing the partnership with BlackRock, Coinbase's stock skyrocketed immediately as it rose 52.3% in the past 5 days. Currently trading at $93.05. If this stock increases any indication of what's to come for Bitcoin, as Cathie suggests, hodlers be ready. But before we listen to Cathie, if you're not subscribed to the channel, make sure to hit the subscribe button, as we put out daily content to keep you up to date on the market.
One of the very positive signs that we've surfaced is that the 200-week moving average of Bitcoin. Remember, Bitcoin peaked close to 70,000 last November, and it got down to somewhere in the $17,000 range very recently, and that broke the 200-week moving average. So that was a very negative sign. So the technicians out there were saying, well, if it cannot reclaim and get back up there pretty quickly, then we're probably going to 10 to 13,000. So it has reclaimed the 200-week moving average, which is a little bit above, I think, 21 or 22,000. So that's reassuring. We've seen some stabilization there. And the decline this time around, believe it or not, it was pretty intense, but was not as steep as it has been in the past. Normally it's more than 80% decline. So this was close, but we didn't quite get there. And then the other reassuring piece of news recently that came out was an agreement yesterday announced between BlackRock and Coinbase to partner so that BlackRock could, through its Aladdin technology solutions ecosystem, on which $40 trillion worth of assets sit, they wanted a seamless on-ramp into crypto that Coinbase is going to provide. So this is another legitimization of Bitcoin and crypto generally as a new asset class. Some of this may have been caused by demand pull, institutions saying, hey, we want to get involved, and they're trying, but the plumbing was just too difficult. So that's good. We did a study on institutions moving into crypto. And if we're right, that 40 trillion just from BlackRock's platform hosting other institutions, that would translate, if you just took our study, which basically said if you want to access crypto, but you want to minimize, you're more focused on minimizing volatility than increasing your Sharpe ratio, then you would put 2.5% into crypto. And if you're more interested in the Sharpe ratio, so returns per measure of risk, than you are about volatility, you'd put 6.5%. So assuming that 2.5% on this $40 trillion platform, that's $1 trillion of demand. Now, it's not that, and that would more than double the Bitcoin price right there, if we just assumed it was all done in Bitcoin, which this agreement is only focused on Bitcoin. Now, what that misses, however, is what we call illiquid supply. There are hodlers out there, holders for dear life, or I've forgotten what that's all about, hold on for dear life. And so the illiquid supply, according to our estimates, is about 14 million out of the roughly, I think we're into near 19 million, 18 to 19 million Bitcoin outstanding. So illiquid, 14 million. And by our calculations, only 3 million units are truly liquid. So the demand, if we were to see a $1 trillion increase in demand, then it would probably drive the price up much higher than the doubling that I just mentioned.
To watch the full update, check out the link in the description. What do you think of Cathie's thoughts? Here will BlackRock take Bitcoin to new heights? Leave a comment if you found value in the content. Hit the like button, as that greatly helps the channel find similar viewers like you. If you're not subscribed, make sure to subscribe, as we put out daily content to keep you up to date on the current marketing news. Thanks for watching, and we'll see you in the next one.